Wall Street is reopening after the long weekend. Before Good Friday, U.S. benchmark stock indexes closed with notable gains. The S&P 500 hit an all-time record, having closed above the level of 4,000 points. The reason for such euphoria is a new stimulus package worth $2.2 trillion proposed by Joe Biden. The detailed plan to overhaul the U.S. infrastructure and manufacturing has made a profound impact on market sentiment. The Dow Jones is on path to a new high recorded in mid-March. The index opened the New York trade at near 33,000 and climbed to 33,150 later in the trading day. The benchmark index for blue-chip stocks is expected to trade quietly today and tomorrow, with the prospects for a further advance until the end of the week. The US dollar index is likely to take a long break after a robust rally. It opened on Monday on the positive note, but it appears took control of the market in the second half of this day. Analysts reckon the index is set to trade in the corridor of 92.40 to 92.90 without prospects of overcoming 93 points. At the same time, the Canadian dollar is trading mixed, being confused by the dynamics of the US stocks, the US dollar and oil prices. At the end of the last week, analysts spotted preconditions for a further advance of the Canadian dollar. Meanwhile, the loonie is trading in the corridor of 1.2450 and 1.2710 on the grounds of technical analysis. Bitcoin opened in the red on Monday. The number one cryptocurrency declined to $56,800 per token. However, Bitcoin regained footing to almost $57,000. Meanwhile, financial markets, including the crypto market, is thin on the back of the Easter holiday. Besides, investors are shifting focus towards the traditional markets as Joe Biden's administration is ready to carry on with the more stimulus measures. The massive public investments will be allocated for the US infrastructure that gave a fresh impetus to the S&P 500. The psychological background in the crypto market does not favor a further rally. Thus, today and tomorrow, Bitcoin is expected to trade at around $57,000 with minor dips. The new relief package worth $2.2 trillion is going to be in effect for 8 years. This package is supposed to be funded through a tax hike, but without extra cash pumped into the US economy and markets. Once market participants grasp the point, euphoria could ebb away. Interestingly, the new plan by Joe Biden has been already targeted by congressional Republicans. That could entail political discord. Investors welcomed albeit used non-farm payrolls that prove a robust recovery in the top global economy. The unemployment rate dropped to 6% in March from 6.2% in February. The public and private sectors created 650,000 jobs, much stronger than expected. In other words, the first relief plan by Joe Biden has worked well. And this weekend, some reports indicated that private investors are poised to exit the equity market due to currently elevated quotes. So, investors foresee a downward correction of the US stocks. Does the imminent correction pose a threat to the US dollar? How will it influence other assets? Keep close tabs on our video news. And that's all for today. We keep monitoring the financial market situation. Subscribe to our channel and see you tomorrow.